Wait, no. I've been practicing my my bartender tricks. Oh, that was pretty cool, right? There we go. I didn't drop anything. All right, welcome back to another episode of Mixology and Mortgages. Guys, we are in a higher interest rate environment now. Interest rates are not 2s and 3s. Honestly, they're not even really in the 4s anymore. We're in the 5s and sometimes even the 6s. I get that that sucks. So let's talk about it. Let's talk about some ways that we can get a lower monthly payment with your mortgage, even in a higher rate environment. Guess what? On top of it, we also have higher home prices, right? Home prices are rising. Interest rates are rising. Is affordability just dead? We're just screwed. We can't buy a house right now. If you're a first-time home buyer, there's not really down payment assistance. Interest rates are higher and home prices are higher. It sucks. But today I want to talk about some unique things that you can do to help keep that payment low with also keeping your out-of-pocket ideally as low as possible as well. So when I first bought my very first house, when I was 23 years old, home prices were starting to kick up. It was after the crash, so they were lower than they are now. But at the time, I was working as a teller at a bank. I think I was making like 32 grand a year. I did not have a lot of money. I just knew I needed to own a home. And so that was part of what I did. I went into it, looked at, options. I kind of figured out where my price point could be. And it was really, really low. There were not a lot of options. I had to go way, way out there. I sacrificed the location to get the house that I wanted. It took me, I think, like 45 minutes to drive to work every day. So I had a little bit more of a commute, but I was able to get a cheaper house. It actually was priced higher than I initially had looked at for where I wanted my mortgage payment to be. And rates were kind of increasing. I want to say they were in the 6s as well. I want to say it was like 6.5 was the rate back then. I came across a loan program honestly by accident. It was something that the builder was offering. I ended up buying a brand new house. It was a spec home, so I didn't get to pick like my countertops or tile or anything like that. It was just a new build house, but I didn't get to choose any of my options. With that house, it was priced higher than I initially had wanted to get approved for. The payment was a little bit higher than what I had wanted, but this loan program was they called it a step rate program. So if you ever heard of a step rate or a temporary buy down is what we called it. Basically, here's the way that it works. My interest rate was a 30-year fixed loan at 6.5%, but for the very first year, I wasn't paying 6.5%, I was paying 4.5%. The rate was 2% lower for that first year. And then on year 2, it went to 5.5%. So I paid that for the whole second year. And then on year 3 is when it went up to 6.5. And that was the payment that I was really scared about. Like it was something I could handle, but it was like, I don't want to have to pay that if I don't have to. When the time came, luckily interest rates were a little bit lower. And so I was able to refinance. I had paid my principal balance down a decent amount, and I was able to refinance to a lower rate that actually got my payment even lower than what it was that very first year, with the interest rate being at 4.5. We have this product available, guys. This is a super cool loan. I really recommend it for those that are worried about that payment. Or, if you're a first-time home buyer, especially if you're just starting out in your career. I know for me, I was a teller and I hadn't planned to be a teller on years 2 and 3. I'd planned to become a banker and move up and make more money. And so that by then that payment wasn't as scary. So for me, this was a perfect situation. I don't know if this is your situation or maybe somebody that you know, but this could be a very viable option for you. And we have other options. So if you want one where it's lower for, let's say, the first year and then fixes to the other one, or we have that 2-year one that I talked about. It's 2% lower for the first year, 1% lower for the second year, and then on the third year, it becomes that final one. And the cool part about this is we take the guesswork out of what the interest rate will be, different than like an adjustable rate mortgage. We know where the rate's gonna be. We know where the payment's gonna be, so you can plan for that. This is a great opportunity, even if you're fine with the higher payment. You could do this now because typically your first year in the house is the most expensive, right? You got furniture to buy, you got decorations, everything that goes into living in a home for the first year. If you could save $200, $300, $500, $600 on that monthly payment by paying just a little bit extra in closing costs, this could be a great option for you. I'm a huge fan of the 2-1 buy down just because this is a program I used when I bought my house, but I've also helped several clients in this exact same situation when we were in higher interest rate situations. If you want to learn more about it or take a look at, what the costs and things like that are involved, hit me up and I'd be happy to go over that with you. But now let's make a cocktail. This is the fun part, right? This is what we're really here for. This cocktail is called The Low. My mom for my birthday recently bought me a cocktail recipe book, and it was by T-Pain. It's called Can I Make You a Drink? I thought it was super clever, but there's some legit drinks in here. So this is one that's in his recipe book called The Low. The only difference is I'm swapping out one of the ingredients. He called for a peach liqueur, and I'm gonna use peach whiskey because, more of a whiskey guy. Tequila-based drink. We're gonna be using the Rocks Terramana small batch tequila. I already mentioned the peach whiskey. We're gonna throw some of that homemade grenadine in there, as well as some orange bitters, and then we're gonna put it in a nice fancy glass, and we're gonna rim that with a little bit of mango chili salt. First off, it calls for tequila. Oh, wait, no. I've been practicing my my bartender tricks. Oh, that was pretty cool, right? There we go. I didn't drop anything. We're gonna start with 1.5 ounces of tequila. You can use whatever tequila you want. This one calls for a Blanco tequila, so I wouldn't use a Reposado or Añejo. 1/2 ounce of this peach whiskey. This one's the Crown Royal peach flavored whiskey. This thing's delicious all by itself, but again, we're mixing it with some tequila, so what could go wrong? 1/2 ounce of that bad boy. 1/2 ounce of the homemade grenadine, which again is just pomegranate juice and sugar boiled down into a syrup, 1:1 parts. Man, this smells good. 1/2 ounce of fresh lemons. So slice this lemon up. Again, I don't ever really measure the lemons. Half a lemon is pretty much 1/2 ounce. It's gonna be pretty close. So after you've juiced the lemon, this is where you can kind of like put a little bit on the rim of the glass here to help with your salt if you're gonna rim it. It doesn't call for this in his recipe book, but I like to do things a little bit different. So we're gonna use that mango chili salt just off to the side there. Making a mess. All right. There we go. Bitters. A couple of dashes of orange bitters. Any kind you like. 1, 2 of that. We're gonna shake this bad boy up. Get some ice. And then we shake it. Shake the low. Whoa, that was dangerous. Okay. Double strain this bad boy. That way we don't get any lemon juice remnants or the ice or any of that stuff in there. Shake it. And there you have it, guys. Let's make a little lemon garnish here. Use a lemon peel this time. I feel like I've been skimping on the garnish when I make these, probably because I suck at it. Okay. And we'll just twist up that garnish. Throw that on the side there. And there we have it. The Low. So don't be scared from the higher interest rates. Historically, guys, they're not super high. Interest rates we're in the 5s, maybe 6s. You want to look at that payment. That's the one you can afford. The rate doesn't matter as much as that monthly payment, and this 2-1 buy down or this step rate is a great way to get a nice low monthly payment for the first or even second year. That way we're set up nicely to refinance in the future. Been another episode of Mixology and Mortgages. I hope you guys have a great rest of the day. Cheers.